Hey, everybody. Welcome to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at EWOTrader.com. And welcome to our show this week where we don't just talk stocks, we talk about how to profit on stocks around earnings events. This week, we're going to talk about our trade from last week. You know, last week was a holiday week, yet we still had earnings going on. We did a trade on Workday. We squeaked out a little bit of profit on there. We'll talk about how that happened and what happened with that particular stock. And then this week, we're tracking over 180 stocks once again. But what's interesting is as we move into December, which today is the first trading week of the month of December, we are looking at a significant reduction in the amount of earnings. November, we had over 3,000 stocks declare earnings. And then this particular month, we are looking at 433. All right. We are looking at 433 stocks. So don't forget, as we go through this, you can use the chapter feature to look at each and every one of the stocks that we look at. Here we go. All right. As we get into our week this week, you can see our list here. We break these out between those potential stocks that are breakout candidates and those particular stocks that are consolidation candidates or that are going to move very little. All right. So we had just a couple of stocks today that are on the breakout side. And what's interesting about this week is we have a significant amount of breakout potential stocks and many fewer stocks that are consolidating or quiet. You'll see there for Monday after market close, we have no qualified candidates. But then as we get into the week, let's highlight some of these stocks as we get into it. So we're going to start with the quiet side of the ledger. All right. Now, when I talk about quiet stocks, what we're looking for here is stocks that move less than 10%. All right. Really stocks that are moving single digits through their earnings. These are usually more older companies, more well-established companies. Here's an example. Okay, this is only an example. This is Yum Brands, and I have highlighted the earnings with a red line and also an ellipse. And you can see that the stock, yes, it might gap a little bit, but it's only a couple of percentage points. It's not really exciting. In fact, you can see that this particular stock had a trading range of between 125 and 140 all year this year. All right. Just oscillating around 125 to 140. All right. So this is what we consider a quiet stock. So let's take a look at our list. And you can see here that we really begin tomorrow with a couple of stocks. So let's take a look at a couple of stocks here from our quiet list of stocks. Let's begin with Salesforce. The symbol for Salesforce is CRM. And you can see here the stock has had a nice little run up. This is a $330 stock. Earnings are going to be Tuesday, December 3rd, after market close. That is tomorrow, after market close. The average move here is just 7% for Salesforce. And if I pull in more data, although we're not too worried about the overall trend of the stock, all right, you'll see these gaps in here. And believe it or not, really the only one that challenged us was the previous earnings announcement. This back here in June was the only one that kind of got our attention that maybe Salesforce is starting to get a little bit more volatile. I find the pattern here pretty interesting, and I would definitely, if I was selling premium, I would sell options. Try to get my break evens on that about 10% out of the money for a stock that has an average move of 7%. If that can happen, then good. An iron condor, a butterfly, those are the types of option strategies I would do around this. Whichever one gives me the higher probability of success and a nice return on my risk is what I'm looking at there. So that's Salesforce CRM. Again, earnings Tuesday, December 3rd after market close. And that's how we would trade that. Now let's go over to Cracker Barrel. This is an interesting stock here, as the stock has really sold off after hitting a high of 175 some time ago, actually a long time ago. You could just see the long trend down. This is there is that top at 175. There are multiple tops at 175. That is just the latest one. And then the big sell off here. This thing has been in a big downtrend, but I drew this trend line to see if, oh, hey, the pattern might be changing and Cracker Barrel might be on the way up. However, for our purposes, we're just looking at the earnings event. Cracker Barrel has earnings tomorrow, or excuse me, Wednesday, December 4th, 2 days from now, before market open. And again, an average move of just 7%. All right. So what we're going to do is look at implied volatility. That is going to be elevated. It's going to keep growing up until the earnings announcement. And then we would sell premium. The condor, an iron condor, or a butterfly are really the three best option strategies that are hedged positions. We don't want to sell options naked. And that is how we want to generate some returns with a stock like Cracker Barrel. And sometimes, so again, what I would do is look for where I could get my break evens in the trade about 10% out of the money for a stock that moves about 7%. Okay, finally, Kroger. Okay, this is a usual favorite of ours because it has a average move of 5% or less for Kroger. Now, earnings for this are going to be on Thursday, December 5th, before market open. Okay, several stocks here with earnings announcements before market open. And again, the average move of 5%. Every now and then there is a little bit of a surprise. This last earnings announcement back here in March had to deal with some merger information that should be past us now, and we should be back to normal on our expected moves for this particular stock. All right. So now that is our list. As you can see, we'll go back to that list here in just a moment. But then let's get into our volatile stocks. These are the race car ones. These are the ones that are really exciting to look at. And let me show you an example of a stock that is a good breakout candidate here. And this happens to be Shopify. This is just an example. All right. And you can see here, I've got the earnings announcements listed with the vertical red line and then the ellipse on these. And you can see how the stock gaps around through earnings. And this stock has a double-digit history of movements. All right. So 17% over the past 4 earnings cycles for Shopify. And again, it's not on our list for this week, but that is just a historical example of what we look at for breakout candidates. So what's coming up this week? Well, let's begin. And we see some favorites that we've had. We trade these on a regular basis. And I'm going to begin with a company called OCTA. Okay. OKTA, not necessarily a familiar company, but this stock has an average move of 14%. Okay. Double digit. It has earnings on Tuesday, December 3rd, after market close. Stock is higher today by 4%, which I find very interesting going into earnings. You see this nice consolidation pattern here. I would have liked to have that pattern go through today. This would have been a really good opportunity, but now the stock already seems to be moving. You can see the prior earnings announcement. Boy, that big gap down from in the high 90s, it opened up at below $80. Okay, big move down. And as we go back in history here, you can see, guess where the earnings events are? Right here, these big gaps. So this is pretty standard for a stock like OKTA, is to move these double-digit amounts. And so if you can get your option trade priced where the stock only needs to move, say, 10% for you to start making money, and the stock moves historically at 14%, that's an ideal setup. Now, what do you trade around these? Well, we trade straddles and or strangles. All right, which one ever gives you the better break evens, the lower potential debit. Okay, so we're not selling any options. We're just buying a call and a put at the same time with the same expiration date. All right, and what we're looking for is, again, either a straddle, which is the same strike price, same expiration date, or a strangle, which is 2 different strike prices, but again, the same expiration date. So a call and a put on a strangle, 2 different strike prices. That's how we would look to trade this. All right. Another favorite here is Foot Locker. Okay. Foot Locker, boy, this stock has a historical move, been a great mover for us. Historical move of 25% for Foot Locker. All right. Now, this stock now is all the way down to $25. If I pull in more data here, you can see that it Look at these gaps this stock has had in the past. This stock bounces around, um, um, just like just like its shoes going up and down on a basketball court. Athletes wearing their products. I mean, a lot of volatility. This stock definitely moves. So again, if you can get the pricing here, a straddle or strangle is your best bet as we go into earnings. Earnings for Foot Locker are Wednesday, December 4th, before market open. And again, has an average move that is greater than 25%. All right, so the final stock here on our list, well, actually, I got a few more, but these are the ones that I wanted to highlight that made our list. Okay, and this is Build-A-Bear. BBW is the symbol here. Yes, Build-A-Bear is a $38 stock. All right, that Build-A-Bear has earnings on Thursday, December 5th, before market open. It has an average move of 14%. So again, price out the straddle or strangle. If that is coming in at 17%, well, it usually takes some bigger news, maybe some unexpected news to get the stock to move greater than that amount. So that wouldn't be a viable trade for a breakout candidate. All right. But if you're finding pricing on your straddle or strangle coming in, expecting maybe a 9% move, then this is a great candidate for a straddle or strangle. So again, earnings on Thursday, December 5th, before market open. Now I got a couple more stocks for you that I wanted to go over because these did not appear on our list because on my list, okay, I highlight the breakout stocks that have the highest average expected move, okay, like Foot Locker, okay, like Build-A-Bear, okay, and then those stocks that have the lowest expected move, like Kroger, less than 5%. These stocks that I'm about to talk about are going to have moves between, say, 7 and maybe 9%. They're just kind of right in the middle, but they almost always make our list of something that we want to watch. So let's begin with Dollar Tree. Okay. So Dollar Tree has come, man, it's been really under pressure this year. This has a earnings announcement on Wednesday, December 4th, before market open. The average move here is right at 10%. Okay. So this is a potential mover. The problem is oftentimes pricing on this is for, say, a 12% move or 13% move when the average is 10 and you do a straddle or strangle, that can be a recipe for a losing trade. All right. And so you can see the stock does gap around, but does it gap enough? All right. So you definitely have to get your pricing. And often I've gotten that. That's why I wanted to include it on my list. I will always look at it. And if I can get my pricing for maybe a 7 or 8% move, and the average move is 10%, that makes sense to me. Now, its sister store, Dollar General, okay, it also is on my list. All right. And as you can see, earnings here are Thursday, December 5th. All right. The average move here is 8%. And the stock has gapped around in the past, but this is because of some recent news this year between the merger and acquisition between Dollar Tree and Dollar General. You often see these stores combined together on their newer store builds. All right. They actually put the two stores in the same building next to each other. It's kind of crazy, but you see them both, and they're both priced around the same: $72.79 for Dollar Tree, $77.34 for Dollar General, both in the $70 range. Very interesting there. Then two other retailers I want to talk about here is Lululemon. Okay, this is a $330 stock. All right, it has earnings on Thursday, December 5th. After market close, it has an average move of 8%. All right, so Lulu once was a real high flyer for us, always doing double digits. Now it's quieted down a little bit. It's a little bit more mature company. You do see a little bit of gapping action. It does gap around once in a while, but it is a kind of a roll of the dice. We are looking for stocks that are pretty consistent in their moves, whether they be quiet or breakouts. And then when you get kind of a 50-50, sometimes these stocks move, sometimes they don't. That's when you got to be really careful. And Lululemon is one that fits right in there. And so does Ulta Cosmetics. To round out our list today, all right, this has earnings on Thursday, December 5th, after market close, has an average move of 10%. Okay, right in there. Once again, the stock can move, no doubt about it. It can move double digits, but it also has moves of 7%, of 6%. And that is what throws this off, okay? And kind of makes us a little cautious, really looking at pricing for what type of strategy we want to apply to it, and really paying attention to the news and the state of the market, state of the economy. All right. So, and Ulta Cosmetics is one of those that, you know, people will continue to spend as long as they can for their shoppers will, okay, in a store like Ulta. But when sales are down, that's when volatility could pick up on this. If they're pretty consistent, we expect moves right in that range of 10%. But otherwise, if they're blowing it out of the market or their sales aren't good, that's when volatility could really come in. So let's recap here real quick. Let's show our list once again. Those four stocks I just talked about are not on this list, but notables here. We did talk about OCTA. Look at that. We have Marvel Studios. Sorry, not Marvel, but Marvel Studios on here, a well-known name. Chewy is on our list. Then a couple of banks, Canadian banks, believe it or not, TD Bank and BMO. That's Bank of Montreal. Those are quiet stocks. Okay. And so lots of opportunity here as we go through this list, even though the month of December, we have dropped drastically in the number of stocks that we have opportunities on. But the opportunities are pretty consistent each and every week. And believe it or not, we're watching the same amount this week that we were last week. So another good week for us in opportunities that are up and coming. So let's talk about our trade that we did last week as we entered a holiday week. And that trade was on Workday. All right. We have Workday WDAY that was a breakout candidate. Now, on these breakout candidates, this is a strangle. And I know this because of the flat bottom on the black line there. You see on the right hand side on the risk, what I call the risk graph. All right. It has a flat bottom and not a pointy bottom. That means that this is a strangle. And if you would like to learn how to trade these, how we trade these, I do have a free guide that's available for you. And that's available at ewotrader.com/straddle. All right. And you can download that free guide. Please go to that site, ewotrader.com/straddle. Download the free guide, and you can see what my criteria is and how we trade these each and every week. And we trade these in a portfolio called our Delta Neutral Breakout portfolio. The quiet stocks are in a different portfolio called Delta Neutral Income. Okay. And these stocks that we're talking about today, these breakout stocks, are in Delta Neutral Breakout. All right. So Workday last week, this tends to be a pretty volatile stock, and it didn't disappoint. However, let's look at the results here. A very minimal result last week. Look at the candle. Okay. The stock gapped open. It gapped down quite a bit. Okay. Well over 10%. The stock gapped down and opened at 237.50. Okay. In watching the stock for the, in the opening cycle, noticed a little strength in the stock. And that's when we had to pull the trigger. Okay, as the stock climbed up over 238, we exited the position, and it was right there at I think it was like a $67 profit, and that was a 3% return on our money. But the good news is we were able to pretty much break even, made a little money, covered our commissions in this type of trade, and that's what you want. Okay, when things don't quite go as you expected, you want to be able to make a recovery, and that's what we were able to do there in the early morning of trading after the earnings announcement. So the profit was just $67. That's a 3% return in 2 days. Okay, but again, that's part of this great run that we've had here recently, and we're going to continue hopefully that great run by this week's trade. So let's take a look. And of course, you guessed it, we are going to take a look at Foot Locker today. All right, Foot Locker is our trade of the week here. This will be a strangle, and this one is very affordable. The debit here is about $330, $350, right in that range there. How do I know that? Well, I see the black line and where the flat bottom is, and that comes in before the $400 level. So I would, I know that my risk is then only about $350. And again, we're looking for a big breakout for Foot Locker, either up or down. And again, a historic mover of 25% or more through earnings on average. We expect that again here this week. So once again, be sure to look at the chapter feature, identifying each and all of the stocks that we talk about each week. We'll see next week how we did with Foot Locker. Hope everyone had a nice holiday last week, but we are back to trading here in December, full trading week this week, and everybody get ready to go because we have lots of opportunity this week. So I enjoy being here with you every week. I appreciate you being here every week. Come back and see us. Look, please like and subscribe. We want you back here each and every week. So everyone have a great trading week, and I will talk to you again soon. Take care.